Holy swing and a miss, Batman. Non-farm payroll, folks, came in at 74,000. That's that's not a misprint. That's not there's a one missing in front of that. No, that's 74,000. Consensus was 196,000. Anybody remember Wednesday? Remember Wednesday when ADP came out with their non-farm payroll number? 238,000. Forecast 199. Wow, blew the doors off of it. And what did I say on Wednesday? Who cares? ADP, I still don't know why they publish ADP or the market even looks at it, because look at what the government came out with. Not even close. 74,000 jobs. The unemployment rate went down to 6.7%. Whiz, that's great news, right? Wrong. And look at this. Average hourly earnings went down as well. What recovery, folks? This jobless recovery just continues to muddle ahead. The jobless rate at 6.7%, folks. You want to know why? People not in the labor force, people who have given up, who are sitting on their couch eating Cheetos because they can't find work, soared to a record 91.8 million. The labor participation rate is at 1978 levels. I mean, a picture's worth 1,000 words there, folks. Absolutely unbelievable. This is not good news. I got to tell you, the way the market's reacting is very interesting. One more thing I want to tell you that is a big canary in my coal mine is the Baltic Dry Index. Worst start in 30 years. What is that, Whiz? It collapsed 35%. Who cares about the Baltic Dry Index? Folks, transports, FedEx, UPS, ships, the Baltic Dry Index, they tend to lead us into recessions or pull us out of recessions or bad economic times. Folks, if people aren't shipping, if commerce isn't moving, the economy is not getting better. The collapse of the Baltic Dry Index does not bode well, and neither does this payroll report. That's why it's very interesting to see what's going on here with the market only down 31 points when I'm shooting this, and the SPOO's essentially flat, just down a point right now. I got to tell you, this proves that we're still in this transition period out of bizarro market, because a miss of over 100,000 in the jobs report from the forecast would have sent this market down 600 points in the, quote, old days. So I got to tell you, I think the market's still kind of standing around right now, rubbing its face going, wow, we just got smacked. Is this really bad news, or is the Fed still going to think about leaving or continuing their tapering? I got news for you. Yeah. I read a report on Goldman, even before I read the report from Goldman Sachs. I said, nah, this isn't going to impact the Fed. The Fed wants to get out of this fight, folks. They really do in 2014 want to get out of the business of inflating asset bubbles. And one of the Fed heavies said that yesterday. Like, yep, I really think we are in an asset bubble here. But what are we going to do about it? Yeah, Lacker. That's who it was. Lacker, Jeff Lacker, admits there's an asset bubble, but we're essentially reluctant to pop it, right? Awesome. So that's why I think the market's kind of wandering around here, is because they're like, well, wait, with the jobs data being this bad, the Fed would be nuts to go anywhere. Well, we've been wrong about the Fed to this point. When we thought they were going to taper, they didn't taper back in June when we thought they would taper. And it's just, we really are lurching left and right all over the place in this market. Very, very interesting to see what's going on in the market with this jobs report. It really is. It's shocking to me. It's absolutely shocking to me that that's going on. And here's another canary in my coal mine, but an interesting one. The VIX, the volatility index, that fear gauge, quote unquote, is down right now. Market down, VIX down. That's very interesting. That tells me that the market's stunned. If people aren't flocking to the VIX right now to get protection, I think they are believing that the Fed isn't going to go anywhere. I agree with Goldman Sachs, and I'm calling it right now. I think the Fed still stays on their taper program and eases out of this thing, folks. So we have a Fed meeting at the end of this month, and I think it continues. I mean, going into the taper and reading the minutes Wednesday that we talked about from the last meeting, Um, it would, I think, would take a couple jobs reports like this, really, really bad, to get them to hesitate their tapering. But I think we continue, folks. So, market, get ready for some serious volatility, and get ready for the market to eventually wake up to the fact that that jobs report was horrible. Average hourly earnings went down, and the labor force participation rate is at record lows. Interesting time. So I love it, folks. I love the volatility as an options trader. I love trading in this type of market where nobody knows what's going to happen, because that helps me out. That increases premiums and options prices. So I love uncertainty. We could potentially profit whether the market goes up, down, or sideways. So if you're having a tough time figuring out what's going on in this market and you need some help from us here at Top Gun Options or Wealth Creation Investing, give us a call, 888-308-2112, and we can get you into one of our live trading or alert services so we can help you figure out what's going on in all of this stuff. Okay, so I'm gonna enjoy trading the rest of the day. Got some weekly options that are expiring today that I got to take a look at. So enjoy the rest of your day. Happy hunting. Make sure you hedge, and I will see you for Monday's market outlook here at Wealth Creation Investing. Have a great weekend.